Hello everyone, welcome back to my channel. So today is Saturday, it is July the 25th, and currently we are sitting at a loss of almost 100,000 euros, which converted to US dollars, it gives us $113,600, give or take. And this week was yet another unproductive, and the reason for that is because there were some hopes that some progress would have been made over the course of the week, but because of the way the market developed towards the end, we were not able neither to get more puts assigned to us, nor having any calls also assigned. And so we remained at exactly the same spot as we were 1 week ago. And why am I saying this? Because the week started off very promisingly so. If we look here at the 1 week chart, and I'm just going to use the chart for gold, the week started very promisingly. Gold started to rise at the beginning of the week all the way until Wednesday. Yes, that's correct. Until more or less this time around. But unfortunately, and keep in mind, this happened at a time in which oil continued to rise, and this was quite a bit of a surprise because usually when the oil, and judging by the behavior that has been happening over the past couple of months, whenever oil rises, that signals to investors that inflation may come hotter in the near future. So this will put additional pressure on the Fed to hike interest rates, and of course metals will suffer. But even so, as you can see here, oil has been going up throughout the week except yesterday on Friday, and yet metals kept up with this behavior. And so it was quite a surprise to see that both gold and silver behaved in that way. So they moved together and upwards at the beginning of the week until Wednesday. But then this correlation broke on Thursday, and I must say understandably so, because gold and silver were on an absolute rampage. They were climbing very strongly for 2 or 3 days, and so there was some ease up on Thursday, and so they gave back some of those gains before, as you can see here, finishing Friday more or less where they were. However, it's important to note here, looking at the price of gold, and I'm going to just focus here on what happened over the past month. You can see here that so-called resistance, or in this case support, that gold appears to appear to have around the $4,000 mark. This support may still be valid, because you see that there were always some brief dives below 4,000, but all of those recovered very quickly. And for example, here in this case and in this case here, they touched around the 4,000 mark, but then they bounced up again. And in here there was some stickiness around the 4,000 mark here sometimes at some point, but then with the spike that occurred this week, that level of price is now completely blown out of the water. When it comes to silver, and looking here again at the 1 week chart, we can see here that, rather the 1 month, we hit a low last week around the $55 mark, but then we never tested this support again, and it came back up again over the course of this week. So maybe there is some sort of support here around the 55. This has to be tested more often to see if there is an actual support here. But this recovery was, of course, it benefited our positions, even though they had the downside of not letting us assign more puts as we wanted. And so there is an increased risk that we may end up, or we may be treading water in a no man's land at a price level in which we can do nothing about our cost basis, but at the same time the price level is not high enough for us to ditch our shares. And so as I mentioned, the oil went up all throughout the week except yesterday, and for me this is a very worrying sign. And the reason for that, as you can see here, it went up all the way, especially on Thursday. There was quite a strong upward swing, but then it relented somewhat on Friday. And for me this is quite concerning, because here, as you can see again, we are already within touching distance of the $100 mark per barrel. And looking here at the economic data, at the next week we will have PCE. So this is still for the June data. June data should come relatively fine. I'm reasonably confident that this PCE reading will be relatively good one, because it should come in line with the latest reading of the CPI and the PPI, which came softer than expected, especially, and this is something that really needs to be emphasized. If we look here at the 1 month chart for June, between June and July, you see that the price dropped, the oil price dropped, and so this has a knock-on effect on inflation. But if you look here at the July prices, you see that basically it has been full steam up all the way, and this should be reflected on bad readings or very hot inflation readings for July. And when these readings will come in August, I'm sure that gold and silver will take a very large hit. And so maybe that will be another opportunity for us to buy some more shares when puts are assigned. We don't know, but some storms may be up ahead in this regard. The war continues to rage on, and there are no signs whatsoever that this conflict will ease up and the parties will sit at the table and negotiate a potential ceasefire or any other solution, especially in light of what has happened over the past couple of days in this week. The Houthis in Yemen attacked and set alight 2 oil tankers from Saudi Arabia. So apparently the Red Sea route is also unpassable. It cannot be used to flow the oil out of the Middle East. And so with these 2 causeways relatively blocked, the Strait of Hormuz and the Red Sea, and by extension the Suez Canal, chances are oil will remain elevated. And I guess unless some sort of a hope or a memorandum or a project of a deal may be on the cards, oil should remain elevated, and our picture in terms of the hole we are currently in, it will not get better anytime soon. Also, we must keep in mind that we are at a point in time in our progress that, as you can see here, we had to use puts which are fairly conservative, and even though there were some here which have a 21 delta, but all the other ones have a delta lower than 20. And the reason for that is because the puts that we sell, they need to be at a strike price that will allow us to make a sizable dent in our cost basis. Otherwise, there's no point in selling more puts and getting more capital tied up. And so these puts are relatively unlikely to be called in the first place. And even though some of them were in the money after the downswing that happened on Thursday, during the day on Thursday, this huge fall temporarily put some of our puts in the money, but then with the recovery on Friday, this scenario just came out of the window, went out of the window. So yeah, this is where we stand next week. I expect that things will improve a little bit for us. Again, because of the PCE reading, we don't know what's going to come out of the Fed meeting. What I expect is that even though there will be no changes in the interest rate, I think most investors will be very much focused on what's going to come out of the speech, of the post-decision speech, to see if there are anything that can be discerned as a potential future rate hike or rate maintenance, so to speak, because nobody at the current time should be thinking of a rate cut at this point. But we will see. Now, I think we've covered everything in our European account. Yeah, we had sold some calls too. All of these calls are at or above our strike price. You see here that our cost basis for the GDX 85.5, we sold at 86, so this will give us a $300 capital gain. This one at 100, we have for the GDXJ a cost basis of 114, so we sold the calls at 115 strike price, so we expect to get $1,000 of capital gain if these were ever assigned. The IAU is a very tricky one because the option chain is extremely shallow, and so it's going to be very difficult to either lower our cost basis or to get the puts, the calls assigned, because it's not as volatile as the other gold-based indexes, and so it's going to take a lot more work to get back to where we want them to be. But still, we sold the $85 call, and so if it gets assigned, pay attention. This is the strike price we sold is not 84.5, is 85, and so yeah, this is the one. And so if this comes to fruition, which I certainly do not believe that's going to happen, we will have a capital gain of $600, but these are still a long way away. They are almost a month away, or should I say 4 weeks away from being expired. So yeah, nothing to do here. These puts were selected specifically to bring our cost basis down to at least close to 25.5, because 26 is our current cost basis. The calls we had sold expired. They were in the money these calls were in the money on Wednesday, but then because of the gold and silver came crashing down, these calls rather expired, simply worthless, and nothing else happened here. We are of course in a quite precarious situation when it comes to the SLV. This position is humongous at this point. We are not only in a position that it's going to be very difficult to move the needle in terms of our cost basis, but also in this situation, selling 54 contracts at a time, we basically cannot close a position. First of all, because the premiums we collect per share are extremely small, but then closing the position and rolling over to another one, which would be something that I would consider to do, that basically goes out of the window as well, because for me to open this position with 54 contracts, I had to pay almost $40 in fees. And so we can predict how much fees are we going to pay before the trades. So if I close this position and open another one, we can assume that the fees will be somewhere along those lines. And so yeah, this is not good. And so we have to wait until the position expires, and then we open another one, because that way we at least save one round of fees. And yeah, I think this is all. Let's have a look at where we stand in our Emirati account. And yeah, and here we are. We are sitting at a gain of a little bit over $1,000 in this account. Of course, we are not going to do anything about it because we have already sold the calls against these shares. So we're going to have to wait and see when these will eventually be assigned. And I'm not going to count with this gain or offset this gain against the losses we currently have, because let's just focus on the losses for now, because that's where we want to get out of. And there's nothing else here. We just have this put over here. This put is now extremely expensive because the price of IAU is hovering around 76. Yeah, 76.25. So that is the reason why this option is so expensive. I have it in here, not in the other account, because we don't have enough buying power on the European account to have the put. So chances are, if this is a sign, we will have split shares between this account and the other, as we already have here with the GDX and the GDXJ. But of course, we could sell them directly and pocket this profit, but makes no sense. We have to keep with our plan because we need to save or to rescue the positions entirely, not their fractions. And yeah, next week we have no buying power left here. We still have buying power in the other account, in the European account. So we will basically try again and see what we are going to do potentially for next week, because maybe I will make another deposit here. We'll see. But if we do, maybe we are going to go again for the GDX, because the GDXJ will use the buying power of our European account to roll over this put that expire worthless with a 97 strike price. So this calculation is out the window for now. This put of IAU, if it's a sign, will bring us our cost base from 84.25 to 83.28. So we'll be able to at least 83 and a half calls will start to become viable for us. And so because the GDXJ is going to be the put will be sold in our European account, in this one, in our Emirati account, if I deposit more funds, SLV, there's nothing we can do at this point. The position is so large, we can hardly move the needle. We will have to try to get something out of the GDX again. The SLV, if I'm not mistaken, maybe we could only bring down our cost basis materially if we sell a put at around 47 or 48. But as you can see here, the price is already at 52.66, so it's too far away from our desired strike price. So there's nothing we can do about it except wait. And this is everything that I have to show for this week. So next week we'll see what we are going to do on Monday and see what's going to happen with the PC later in the week. And I'll see you there.